In his newsletter, his most recent newsletter, he doesn't mince words. He says all derivative transactions should be frozen and settled as best as possible. Legislation is needed, at least temporarily, to eliminate tax deductibility of interest for everyone. Corporate taxes should be cut to 17%. If derivatives are still to be used, they have to be regulated. He goes on and on. He doesn't mince words, and that's the International Forecaster newsletter that you can get by calling 877-479-8178. Our guest, Bob Chapman, the editor of that newsletter, is rarely wrong. Now, it was brought to my attention that gold has dropped down into the 800s again. Some people are saying that it's going to drop even lower than that. I mean, is this a time that people should be holding out to purchase gold? This is probably something I should ask Ted Anderson a little bit later at the bottom of the hour. But what is going on with gold, though? Seriously, Bob?
Well, I think the main thing is people misunderstand the sale of gold into the market by the IMF. And the gold can't be sold unless the U.S. government approves it. That's our Congress. And there's other legislations that have to do the same thing. And there's a big line waiting for gold by countries. And that gold's never going to hit the market. Historically, if you go back to the last time the government or IMF or whoever was a gold seller back in the 70s, you'll find that gold fell off maybe $20 or $30. And after the sale was over into the market, gold doubled. So it's not something to be concerned about, but it's a propaganda weapon. And that's why gold has reacted the way that it has here. And there's nothing overbought about gold at all. It's recently come back from 1,000 and then from 960. It's tested the 880, 900 area. This is the sixth time. And so I think there's a pretty good chance it's going to hold here. The news out there is dreadful. We're going to have unbelievable inflation with the increase of $12.8 trillion in spending by one program or another by the Treasury of the Fed, plus the monetization that's going on, whereby the Treasury sells the Fed Treasury bonds and the Fed buys them, only the Fed doesn't have any money. And so they create it out of thin air. And that credit goes back to the Treasury, which they spend monetizing the money in the market. And then what happens next is that the Fed sells bonds into the market, making it even worse. So based upon fundamentals, there's absolutely no reason for gold to go down. It should be going up. And, of course, you've had the U.S. government in the market manipulating it, so that hasn't helped things. It's a terrible set of circumstances when your own government is your enemy.
That's right.
You know, I wanted to refer back to peace of mind that we were talking about before the break, and that is between the stimulus that's going in and the stimulus package this year and next. Most of it's going in next year because it's an election year, and Democrats want to get reelected, and they're the ones who were behind the creation or passing of that. And I think that we were about a minus 6.3 or 6.5 of GDP in the fourth quarter. I think the first quarter will be about the same. And I think the second, third, and fourth quarters will range from even to a minus 4. And that'll probably go on for about 6 quarters, maybe 7. And that means we're going to have a flattening out in the downturn that should last up to the next election.
Okay, we got a 3-minute break. We're going to be right back we'll talk to Ted Anderson for a few minutes about what's going on with gold, and back to Bob Chapman. Well,
I think that you're going to see a lot of banks go under, and it's just simply because they made bad investments, both in real estate and in securities that were related to real estate. The number, when all is said and done over the next several years, could be anywhere between 3,000 and 4,000. Nobody really knows. not even the government with their inspections and everything else.
And even if they knew, they wouldn't tell us. They wouldn't tell us who the weak banks
they
are.
might tell us the wrong thing too, because they have a penchant for not telling the truth. So I expect, what's in the pipeline, which I was speaking of earlier, the money and the stimulus program, the money coming in from the Fed buying Treasury paper, and the Fed and the Treasury Department spending money to bail banks and brokerage firms and insurance companies and others out. We're talking almost $13 trillion, and that figure should increase perhaps to as much as $15 trillion this year. And next year it could range as high as $30 trillion. They know this, but they're not going to tell you that. And the reason they know it is that history tells them that once you start and you get along this road of putting money and credit into the market, you can't stop until it collapses. And so we're going to have a hiatus here, which should last a year and a quarter, where the economy will get slightly better, but the deterioration of the underlying assets will get worse. And when this money has been spent, and a good part of it will have been spent probably by June, July of next year, then all of that spending, which has been keeping the economy from going down further, will be over. And they're either going to have to increase the spending up to $30 trillion and have another stimulus program, which they very well might, then it could be extended further.
All right, but do you agree
going back to what the gentleman said, over the next 6 months, I don't agree with that. I think it'll take probably a year and a quarter for any more real deterioration, unless something happens like a war, attacks within the United States, whether they're real or they're created by our own government, it doesn't make any difference. Banning those sorts of things happening, we're going to get a little hiatus here.
So you think we have about a year and a half then to go. Now, do you agree with me on the statement that if we were taking all of this money that we are giving to Larry Summers or now Citigroup or Goldman Sachs, whatever, if we were taking all that money and putting it into buying, let's say, manufacturing equipment for the United States, and we began to make something actually here in this country, do you think that there is any chance that we could stem the tide of the destruction of our economy if we were to begin right now making things?
Yes, but there's two precursors to that. Most people don't realize the IRS is chasing people all over the world who are Americans who supposedly have accounts in other countries and trying to throw them in jail and take all their money away from them for doing so. And, of course, the Swiss, which represent a large number of people who have accounts outside their own country, have now forbidden the executives and salespeople, or advisors as they're called, in Switzerland from going to foreign countries because they're afraid they'll get thrown in jail. Now, with that said, our government allows transnational corporations to make money and keep it offshore in the Cayman Islands or Switzerland or someplace and not pay taxes on it.
Mm-hmm.
Now, how we solve the problem you just talked about is we have to make all of those corporations bring back the money to the United States and pay taxes on it. Now, normal taxation is 33%. I would like to see 17% because most other countries have lowered theirs. That's why they have an advantage in trade. I don't think Congress will do that, but I do think Congress could force them to bring that money back. Now, that's step one. Step two is tariffs. They've got to institute tariffs because everybody is deliberately devaluing their currency against the dollar to remain competitive against each other and the dollar. So we need tariffs to protect our country. Yes, it's going to hurt other countries, but we've been very, very lax and passive about allowing other countries to cheat us. We don't have free trade. We don't even have fair trade. And so they're going to have to suffer a little as we put it back together. So you need those two elements. You've got to force the transnationals to bring their production back to the United States, whether it's in services or in goods. And it's the only thing that's going to work, and it will turn this country around.